If you're selling on Amazon, you've probably heard that cash basis accounting is the easiest way to do your books. Money comes in, you record income. Money goes out, you record an expense. Done. Pretty simple. But here's the thing that a lot of Amazon sellers are not going to tell you, is that doing it this way, although simple, can hide what your business is actually doing and how it's actually performing. And today, we're going to put two accounting methods head to head. There's the cash basis, and then for booksellers, we're not going to do complete accrual, which is the best accurate way to do your books. We're going to do more of a hybrid method. And there's a reason why us as booksellers can't really do complete accrual method, and I'll get into that more towards the middle of the video. But for now, we're going to go over so you can help decide which method's best for you and what you would want to do. Let's start with cash basis. Cash basis is simple. You got an expense, you're recording that expense in QuickBooks, and it just comes through your bank feed. You got an income, same thing. As soon as Amazon sends you a deposit, you're depositing it or you're recording it inside of QuickBooks. This is the simplest way to do it. And then when it comes to your inventory, why a lot of sellers will choose to do the cash basis method is the inventory, you write it off that same time that you buy it. As soon as you expense it, that's the year that you take the write-off. And this is completely IRS approved as long as you're underneath 25 million. This is the reason why, some choose this path. Not only is it simpler, you're also able to take the write-off now. But here's the con, is what they say, you're kicking the can down the road because yes, you're getting that tax write-off this year, but say, this year you've taken all your write-off for all the books that you bought, and then next year, for whatever reason, you decide to stop selling on Amazon and you sell off all of your inventory. Well, that's where your tax burden is gonna really hurt you, because this year you took all the tax write-off. The next year when you stopped selling, that's whenever you're gonna sell it all off, you'll probably drop all the prices, get all the inventory out of it, you're just done. And you sell everything off. Well, you didn't buy any more inventory to offset the income. So the income that you're receiving from all of those sales that you tried to get all your inventory done with, you're gonna have to pay taxes on all those, and you don't have any write-offs to offset it. So here is the point where you have to decide, okay, look into the future. What are you gonna do in the future? Are you planning on selling on Amazon for the indefinite future and you don't see a future where you're gonna stop? Then, no worries, just put it in cash basis and handle it that way. If there is a future where you're wanting to change that, you might wanna look at maybe changing, maybe not now, but maybe in the future, you might wanna look at changing to a more hybrid method. Now for the hybrid method. Hybrid method it's the most accurate you could possibly be for a bookseller. We mentioned before, with cash basis, you're just putting it all on the profit and loss sheet. You're putting it all as cost of goods sold, and you're getting that tax write-off this year. Well, the hybrid method and the accrual method, we're going to be putting that not on the profit and loss sheet, and we're not getting the tax write-off this year. We're putting it on a balance sheet, which means it's going to be considered inventory. It's an asset to you. So you're not going to get the tax write-off until you sell the books that you purchased. And this is where it gets hard, because whenever you do this method, you have to track your inventory on another spreadsheet off of QuickBooks and A2X and Amazon. You have to track it off of here so that you know your inventory valuation. Because now, for my hybrid method at least, at the end of the month, I'm gonna compare what you have on your, say you used a credit card to buy all your books, what you have, that credit card's put in all in inventory. I'm gonna see that number, and I'm gonna take that difference of that number and your inventory valuation, and the difference is gonna be what the COGS is. And that's what's gonna be written off, because you've sold those books out of your inventory, and I can see that with your inventory valuation sheet, and that's what's gonna be considered COGS, and that's what you're gonna get wrote off that year. So You can literally go from a cash basis method where your profit looks like you're barely, making $10,000, and you switch it to an inventory base and you take all of the write-offs and all of the COGS that you had for your purchases into inventory, and you can go to like $43,000. It's a big difference. So you are gonna be paying more, taxes, or you're gonna be taking a bigger tax burden, at least, up front with this method. And it's why a lot of people stay away from it. And the difference between the hybrid method and the pure accrual method, the reason why, at least I suggest, booksellers don't try to go to the pure accrual method, is because with the pure accrual method, you're gonna have to go 1-to-1. So every single book you sell, you have to take the COGS out. You see, now imagine how many different SKUs you have in your inventory and how many different books have different variation costs. If you were a wholesaler and you have 1,000 units of one product, not too bad. You can kind of average it out and figure out the cost. But if you got to go 1-to-1 for every single book, I have about 1,000 books in my inventory. I don't know how many you have, but imagine having to go through and do 1-to-1 accounting, and you doing every book you sell, you have to put that COGS in and transfer it from inventory over to COGS. Every time you sell a book, and then think about like textbook season, whenever you spike in sales, it's just too much. You don't have to do that method. That technically is the way to be the most accurate, is the 1-to-1 method, but that's why I choose the hybrid method, where I'm just taking a monthly, it's called a journal entry, doing a monthly journal entry where I'm taking the difference of your inventory and putting it into COGS. Yes, it's complicated, but that is the best way, the most accurate way to do your accounting. Now, what is your choice? Are you gonna do cash basis, or are you gonna do the hybrid method, or are you gonna go extreme and go to the accrual method and do 1-to-1? I know this is complicated and I don't wanna overcomplicate it. I'm trying to make it as simple as I can, but it is not an easy thing, especially whenever you get into the hybrid and accrual method. But if you have any questions, reach out to me. You can go to the link in the description, you can click my link, and we can book a 30-minute call and we can kind of discuss, what's right for your business.